Asia Morning Briefing, ETH on-chain metrics signal potential bull run ahead. Byzantine Capital is all in on ETH as Ethereum prepares to take on Solana and return to Layer 1 dominance. Welcome to Asia Morning Briefing, a daily summary of top stories during U.S. hours and an overview of market moves and analysis. For a detailed overview of U.S. markets, see CoinDesk's Crypto Daybook Americas. Keep an eye on ETH. $625.50 is what fund manager March Zheng is telling investors. As Asia begins its business day, ETH is trading above $2,500, down 0.4%. While this might not seem like a lot in the volatile world of crypto, ETH has defied the odds and is up 40% on month, which is impressive because its performance is only matched by memecoin stalwarts like PEPE $0.04122425 and decentralized finance lending protocols like AAVE $264.87. The latter's performance has helped push up total value locked, TVL, in Ethereum past $60 billion. Zheng, the co-founder and managing partner of Byzantine Capital, is bullish on ETH because he argues that Ethereum might dominate as the primary Layer 1 blockchain due to its superior scalability compared to Solana, thanks to the recent PEPE upgrade and persistently lower inflation rate than Bitcoin BTC $105,344.52. It may be reaching an inflection point where both of these leads continue to grow, Zheng said in a note to CoinDesk. It will be a very interesting year. Still, there are potential limits to ETH's growth story this year. Bettors on Poly Market are only giving it a 26% chance of breaking its all-time high of $4,868 in November 2021. Meanwhile, CoinDesk Market Insight Bot notes institutional interest in Ethereum is growing sharply, with exchange balances dropping to 7-year lows and ETH-focused investment products seeing significant inflows, signaling bullish long-term accumulation. Artificial intelligence tokens are one of the year's growth stories, with the market cap of the token category worth over $27 billion according to CoinGecko data. But there's a problem, as analyst Ting Yang from the Crypto AI research house Chain of Thought argued in a thread on X. The decentralized compute infrastructure known as Decentralized Compute Networks, DCN, needed to make decentralized AI a reality isn't keeping pace. In Semi-Analysis March 2025 rankings of GPU cloud providers, decentralized compute platforms barely registered. Only Akash and Prime Intellect appeared, stuck at the very bottom of the list. Most decentralized platforms didn't even make the cut, underscoring the deep challenges these projects face in competing with centralized hyperscalers like AWS or Google Cloud. Coordination, the ability to organize scattered computing resources into a seamless service, remains a critical weak spot. Unlike centralized services, decentralized platforms struggle with basic tasks such as predictable job routing, efficient data transfers, and built-in fault tolerance. Essentials for enterprises accustomed to the streamlined functionality of Kubernetes or Slurm, software tools that enterprises use to easily manage and schedule large computing tasks. Security and technical reliability present additional hurdles. Most decentralized networks lack essential certifications such as SOC 2 or ISO 27001, leaving their systems prone to fragile networking, storage inconsistencies, and frequent latency spikes. As Yen notes, decentralized networks suffer from dashboards that feel cumbersome, unclear payment systems, and confusing onboarding processes, failing the straightforward spin-up and scale benchmark enterprises expect. Finally, economic sustainability remains elusive. Current decentralized networks are overly reliant on temporary token incentives, risking collapse when emissions slow down or halt altogether. Ether's token, after all, is up 70% in the last month, which adds inflationary pressures if someone is subscribing to cloud services denominated in ETH, its eponymous token. Yen argues decentralized platforms don't need to entirely replace AWS, but they must at least be stable, economical, and easy enough to compete meaningfully. Until then, the ambitious growth of decentralized AI will remain dependent on centralized computing infrastructure. The Trump Organization has distanced itself from a newly announced cryptocurrency wallet called the Dollar Trump Wallet, despite promotional branding explicitly linked to the former president, CoinDesk previously reported. A spokesperson stated unequivocally that the organization knows nothing about the wallet, contradicting announcements made by Magic Eden CEO Jack Lew, who had confirmed a partnership via social media. Donald Trump Jr. and Barron Trump separately clarified that the Trump Organization has zero involvement, although Trump Jr. mentioned a forthcoming official wallet from World Liberty Financial, a separate stable coin project associated with the family. The Dollar Trump Wallet's website is currently active, inviting users to a waitlist while promising digital asset trading features yet provides no substantial technical details or release timeline. The confusion around the project highlights Trump's controversial but ongoing entanglement with crypto, previously illustrated by ventures such as World Liberty Financial and memecoins like Trump Coin and Melania Coin. Revolut is exploring an expansion into cryptocurrency derivatives as indicated by a new job listing seeking a general manager to launch and scale a related offering, CoinDesk previously reported. This development follows the successful rollout of its professional-focused crypto exchange, first in the UK in May 2024 and later across the European Union. The UK market for crypto derivatives has recently gained traction, highlighted by the launch of GFOX, the country's first FCA-regulated, centrally cleared derivatives platform. Additionally, Galaxy's UK subsidiary, led by Mike Novogratz, received FCA approval in April, positioning itself to compete in the growing market segment. Sam Reynolds is a senior reporter based in Asia. Sam was part of the CoinDesk team that won the 2023 Gerald Loeb Award in the breaking news category for coverage of FTX's collapse. Prior to CoinDesk, he was a reporter with Blockworks and a semiconductor analyst with IDC. AI Boost indicates a generative text tool, typically an AI chatbot, contributed to the article. In each and every case, the article was edited, fact-checked, and published by a human. Read more about CoinDesk's AI policy.